Welcome to Swing Trade Workshop. My name is Kumar Osok. Today is 29 January 2026. Before we continue, the disclaimer is that I am not a SEBI registered advisor, and before any investment decision, please consult your professional financial advisor. With that, let's continue. Rules stay the same, but I would always alert that please stay in Nifty 500 index stocks. Don't go outside of it because market is very volatile. How was the market today? Today market was not that great. In when in index it was having around 70 points up, but stock wise quite ups and downs were there. Basically stocks were reacting based upon the results. So more the results will be released, more ups and downs will happen throughout the next 1 or 2 weeks. It will happen, and after that theme based concept will play. So what I did, I put money into oil and gas, like I was to mention from last few videos that the opportunity is opening up for refineries and gas. Reason being, India is a big market. That is why India want to secure its energy needs, and for that they are making huge contracts because they have to reduce buying from Russia. And if they do so, then they, and when they see Iran and Venezuela are already in shaky situation, they need to make more and more contracts with Middle East and any other option available. So you might have observed that already BPCL, HPCL, all those IOC, all those companies are now making contracts with different sources. With that, I feel opportunity, meaning the job will be more for those refineries. So and then gas companies. So Petronet LNG is looking interesting, and then Reliance, Chennai Petroleum, and ONGC, where I put a little bit of investment. Then data center theme, like I continue to mention that data center theme is a currently ongoing demand theme, as well as it will continue for 1 or 2 years. Just that price will keep going up and down, and you need to grab the stock at the right time. Why data center theme is so much important now? Because will you be agreed that your data, the Indian government's entire country's data, to stay in USA, looking at the current level of you know situation going on, how the Trump's reacting, how China reacting. So obviously you want your data to be in your own country. So if you have observed Google, Microsoft, they are making data centers. Just like that, they're not building data centers. There is something behind the scene. There is something getting agreed between the government and the companies. Without that, they cannot keep spending so much of money here and there, you know. So that means data center theme is on play and nobody is going to stop it. Okay. So there I already told that entire structure will benefit, meaning starting from land, building, cabling and wire, cable and wires, machine cooling, power generation, then software stacks, cloud, then application stack where the people will write softwares, plugins, data models, all that entire, starting to the end, companies will be benefited. So you keep the eye on many different sectors, and wherever there is a play, you must grab it. So today I saw Kirloskar Engine and Polycab, and I took small position there. Then after that, defense. Recently, defense did a very good bull run. I mean, 2 3 days ago, there was good run actually, and I feel so. If you see the result of Bharat Electronics, it was super. I mean, if you see that, with that, probably solar industry also will do well. Today, Garden Rich also through the result, and it was also good. So considering that, defense will continue to do well, and so it is right time you have to grab small pieces. Then bottom fishing, I think Godfrey Philip will do well. It's a contra bet, and then graphite. I know, I feel that uh, if you want green steel, you need graphite rod for India. Okay, so for that, graphite probably will do well. So I'm keep buying from last few days, and my portfolio looks like this. Energy ETF is doing well recently. Then defense stocks, like I mentioned, doing well. And then Aeroflex today actually jumped up. It's also one of the data center theme, meaning all the losses has been recovered already. Similarly, many, I mean, my portfolio is, whenever there is a rise, my portfolio is rising very nicely because it is theme based, it is sector based targeted. So that means those stocks will first get the first mover advantage whenever there is a opportunity or new money in the market. So no need, you have to hold the patience whenever market is correcting, because as soon as market stabilizes, if you have a strategy, then your stocks will first jump up. So that's what I hope, and that is how it is proving actually. Now let's move to the next section, which is food for thought. Have you ever observed that USD is weakening compared to yen, compared to other Asian markets like ringgit and all that? Why that is happening? So, but yeah, Indian rupee is weaker than that. That's why we always feel that USD is strong, but actually USD is weak uh, back to its 2022. I mean, in 2022, what was the value of USD is now today the same. So that means it's literally correcting. And why it is happening? It is happening because looks like it's a modern version of 1985 Plaza Accord, meaning Trump is trying to do it intentionally in a such a way that dollar gets weaker. That way the debt they have, the value of the debt will reduce, so it will be easier for them to print more and clear certain amount of debt. They are forcing Fed to cut the interest rate. That way the again it will give another factor why the USD will be weaker. Similarly, weak dollar will promote manufacturing. Why? Because let's say you manufacture a lot in USA, but someone has to sell, someone has to buy, and to buy you should have that purchasing power. So if let's say iPhone built in USA is $1,000 and $1 cost is 90 rupees, then you have to pay 90,000 rupees to buy one iPhone from USA. But if the dollar weakens to, let's say, $1 is, let's say, 70 rupees, then you save 20,000 rupees. So then quite a number of people in India will be capable to buy it. That's the idea. The idea is domestic manufacturing, if has to be succeeded in USA, they have to weaken dollar, or else maybe they will build great products, and usually they build the great products. If you really see all innovations, most of the products we see, especially tech gadgets, digital technology, they are great on that. But can the outside world afford that? It cannot. It is very strong. USD will be very strong means nobody can, very few only can afford, and there they cannot execute their strategy to reduce their debt. So all the points, all the dots, when you connect, you already see that 1985 Plaza Accord is on play. It's a new version. So when that is happening, so FPI and FII capital will be out from USA. That is also there is a risk. So if you observe now that Hang Seng Index, Chinese yuan, ringgit, all those proxy play of China, their currency is now super strong. Asian countries um, currency are strong, except few of them like Indonesia is in very terrible situation and all that. But there is some kind of play going on where dollar is getting weaker, and that is making other currency stronger. Indian rupee is in a different situation because we are further making our rupee weaker so that at least we can survive with exporting something to somewhere. But it's in a very different trajectory. Now, what will do then in this devaluation of USD? What, how it will impact Indian market and elsewhere? So what will happen when dollar weakens? Capital will be out from America, and then probably good amount will go to China. Already repeated. Now, so in India, domestic and heavy import sectors will get advantage, like oil and gas, paint and chemicals, and banking. If you might have heard one news that Japan, one of the Japan bank, is buying stake of Sriram Finance. Why they're doing it? Because they see in Japan creating fixed, let's say there is a, if their interest rate is increasing, they have to, and then someone makes a FD, they have to generate that much of return to address the FD, and they have to also develop, grow their company, I mean to grow their bank. So there they see a friendly country like India. So if you see India's friends are like Russia and Japan, are they are actually good friends. They have never created any political statement or against taken any against rule of or criticized anything related to our foreign policies or anything related to our internal matters. So they are friends. They trust us. Japanese market basically trust us. That is why a lot of investment you see from Japan to India. So that is why they are buying the stake where they see a promising future is there. If India USA relation goes better, then there is no surprise that US banks will start to allocate some amount of money in Indian banking as well. So these are the areas: oil and gas, paint and chemicals, and banking. Those sectors will gain in Indian market. Then obviously metal and gold already in a bull run, and what will happen really if it picks. But loser will be IT and pharma, who enjoys the most when dollar gets stronger, will be disadvantage if that goes on, if dollar gets weaker. Yeah, and then Indian Europe free trade agreement has to be finalized and executed within 3 to 6 months, or else we are in trouble. Just that one agreement made, we are happy making a lot of videos. That doesn't make any difference if it is not finally come to the ground, and then people go and do buy and sell. The companies go and do transactions in different countries in Europe. So if that is not happening, then we are in trouble. So it will be a massive cushion if that Europe FTA gets executed or realized. And at this moment, what we'll do? Where to park our hard-earned money? Because if you see, literally our value of the money is degrading. Where to protect? I feel you should not keep all your eggs in one basket, that is in equity. So at least 40% of your investment must be in fixed deposits, or I would recommend go with target maturity funds or money market funds, where during the uncertainties they get the best advantage. Actually, they make the best out of this kind of situation, they make the good deals during these uncertainties. So target maturity fund is all about, they promise that this much fixed value they will give in 3 to 6 years or something like that, and then you do not care about the volatility. That is basically for the retirees who do not want to be shocked with this kind of market volatility. And if you are a young person earning in a salaried job and having taxable income above 30%, then probably money market fund is a good idea to put in, because if you put in FD, then you have to pay taxes on that. You generate 7% of interest, then you give 2% in tax. What's the point? Relative benefit is 5%. It's totally a waste of money. But if you put in money market fund, they do buy and sell, but you do not realize it. Okay, meaning that way, you whenever you need, you get that much money you can pull out from your investment, and on that capital you pay the tax, which is very interesting concept. So I prefer money market fund for the young guys, professionals who are having a fixed salary or promising salary every month, and for retirees, target maturity fund. So it's interesting concept. When it will, this rhythm will go, meaning the de-dollarization, devaluation of USD, which stage of this next 3 years, because Trump got another 3 years only. Within these 3 years, he has to execute his plan, because most likely he will not be getting another term. So if that is the case, then he has to execute his plan within 2026 or by 2027, so that the impact is realized in 2028. Then he say bye bye. you know so in that case, we must be prepared for that. When that will pick, probably in the mid of 2026, when Fed chairman goes out and new guy comes, and then all those dramatic situations will start. That is what I anticipate. All these are speculations I am making. Please be aware of it. Don't take any investment decision based of my stock names and ideas. Do your own research. I am doing this, why? Because I see the interesting things are happening, and then I feel that my audience also should understand this, have some awareness about this. But then taking action against the awareness, totally it's your research which will hold. So maybe ask your advisor, hey, this is what is happening, how you are preparing for that. If you are satisfied, probably you invest, based upon that. So that is what is my idea. So with that, I thank you very much for your time, and I recommend please support me by liking and subscribing, and motivate me by sharing to any of your friends. With that, thank you very much.